The news today is that OPEC Plus ministers are heading to Riyadh to meet and discuss whether oil production cuts will be extended. Last week, OPEC said that the OPEC Plus alliance would hold its meeting in early June, a day later than initially planned, and via a video conference instead of in person. All meetings previously planned to take place in person in Vienna on June 1st will now be held online on June 2nd. The three key meetings that will be now held via video conference are the meeting of the Joint Ministerial Monitoring Committee, JMMC, the panel monitoring market developments, and potentially recommending actions to the ministers to take, the meeting of the OPEC ministers, and finally the meeting of the ministers of the wider OPEC Plus coalition. The fact that the OPEC Plus meetings will be held online suggests that the producers in the pact have more or less reached an agreement about how to proceed with the current cuts, analysts have said. OPEC could still opt for tweaks to output policy later this year if summer oil demand is strong and leads to depleting inventories, according to market observers. Oil prices could turn volatile if OPEC Plus fails to extend production cuts this weekend. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. OPEC changed plans for its June meeting a second time, with key ministers now planning to discuss oil policy in person in Riyadh. The Producers Alliance had previously intended to convene its June 2nd meeting solely via video conference, having called off prior plans to meet at its headquarters in Vienna. Those online talks were still officially scheduled to go ahead, but top officials from Kazakhstan, Russia, the United Arab Emirates, and Kuwait were set to gather in the Saudi capital, delegates said, asking not to be named because the information was private. The changing plans added intrigue to a meeting that has otherwise been widely expected to ratify existing production policy, extending output cuts at their current levels. All of the countries so far confirmed to be going to Riyadh are making extra production cuts, in addition to group-wide supply curbs that currently expire at the end of this quarter. Saudi Arabia, Algeria, Iraq, and Oman are also participating in these so-called voluntary supply reductions. Kazakhstan confirmed earlier on Friday that its energy minister, Almasadam Satkaliyev, will join the meeting in the Saudi capital. Oil prices were little changed, with Brent crude down 0.4% to 81.57 a barrel as of 5:49 p.m. in London. The international benchmark was on course for a drop of 7% this month. In recent days, the Organization of Petroleum Exporting Countries and its allies have been pressing on with informal talks aimed at finalizing an agreement this weekend. Saudi Arabia and its partners are discussing whether to prolong roughly 2 million barrels a day of voluntary production curbs into the second half of the year, according to delegates. They're also considering the possibility of extending the group-wide restraints into 2025, they said. On the same day as the OPEC Plus meeting, Riyadh plans to sell more shares in state oil company Saudi Aramco, a move that could raise as much as 44.8 billion Saudi riyals, 12 billion. The deal will test global investors' appetite for the world's biggest oil exporter and could add further incentive for supporting oil markets. The OPEC Plus group is likely to roll over their current production cuts into the second half of 2024 when producers meet online this weekend, according to analysts and market expectations. The alliance is likely to extend the current 2.2 million barrels per day (BPD) production cuts. 4 anonymous OPEC Plus delegates told CNBC ahead of the crucial meeting. The group would want to avoid an abrupt change in course amid relatively stable oil prices in recent weeks. The market expects OPEC to fully roll over its additional voluntary supply cuts into the second half of the year. Anything less will put further pressure on prices in the short term. IEng commodities strategists Warren Patterson and Ewa Manthe wrote in a Friday note. It would be more difficult for the group to surprise to the upside. Agreeing on deeper cuts would be challenging, particularly when a handful of producers are already producing above their target levels. While a full rollover of the cuts would be important for sentiment and for keeping prices from falling in case market expectations are not met, it is not needed in terms of fundamentals, as it will push the oil market into a deep deficit over the summer, a peak demand period, ING strategists said. Analysts have lowered their 2024 oil price forecast for the first time since February, reflecting lower risks to supply from ongoing wars in the Middle East and Ukraine. A Reuters poll showed on Friday as markets gear up for a meeting of OPEC and its allies this weekend. A poll of 41 analysts and economists surveyed by Reuters in the last 2 weeks saw Brent crude averaging $84.01 per barrel in 2024, with U.S. crude at $79.56, down from April forecasts of $84.62 and $80.46 respectively. Brent has averaged around $83.50 so far in 2024, and fell about 6% in May in its first monthly drop this year. In the coming months, we do not anticipate any immediate threats to the oil market stemming from the conflicts in the Middle East or the Ukraine-Russia situation. The market has gradually discounted the war premium associated with these geopolitical risks, said SEB analyst Ola Havalbye. However, this perspective carries a degree of complacency, and there remains a possibility that the market could be unexpectedly impacted by sudden developments, Havalbye added. OPEC+, led by Saudi Arabia and Russia, is set to meet virtually on June 2nd, where it is expected to keep in place its voluntary production cuts of about 2.2 million barrels per day, BPD. The organization will need to keep production constraints in place for the rest of the year and next year to keep oil prices around the $80 per barrel level, said Suvro Sarkar, energy sector team lead at DBS Bank. Non-OPEC production growth will be driven by offshore developments in Brazil, Guyana, Norway, etc., while U.S. production will stay elevated, Sarkar added. On the demand front, analysts expect growth of between 920,000 and 1.8 million BPD in 2024, with an average estimate of 1.35 million. That is down from a forecast of 1.37 million BPD in a Reuters poll in April, but above the 1.1 million BPD forecast by the Paris-based International Energy Agency in May. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you're looking for a job or an employee. Thank you for watching.